And we are on.
Okay, welcome back to the Searle Sitdown for episode number 2 from Andrew Searle. Okay, great. G'day everyone. So the question just been posed, and a lot of questions that clients often ask when they come into the office is, how much can they borrow? So obviously all the clients that come in and sit down with me, the first question they want answered is, how much can the banks lend? And everyone's circumstances are different. And as a broker, the first thing that I look at is, obviously, if they're self-employed, I want to see at least 1 year's financials, preferably 2. If they're a wage earner, then I want to see their last 2 pay slips. And that's going to give me the information that I need to assess their income. Now, obviously, people are going to maybe do some overtime, and there's going to be some allowances, which we may be able to factor in. And that's really going to help work out what we can actually get from the bank. So when the banks do their assessment on your borrowing power, one thing that they will look at is the liabilities that you hold. So having a personal loan or a car loan or a credit card, that's going to impact your borrowing power. So the banks will work off the credit limit on any credit cards. The higher the limit, the higher the expense that the bank's going to be putting into their calculators. So one of the tricks that we can do is we can actually request the borrower to actually reduce the credit card limit. So if they've got a $15,000 limit, we reduce that down to $5,000, and that's really going to boost their borrowing power. If they've got a car loan and the commitment on that's really high, we might actually get them to actually close that credit card. They may have sufficient savings to actually pay that car loan out or that personal loan out, and that's really going to boost what they can borrow from the bank. Another thing that the banks will look at, apart from your base wage, if you're a wage earner, commissions and overtime. Now, a lot of the banks won't use the majority of the overtime. A lot of the big banks will use around about 80% of the overtime. Now, commissions is quite awkward. The banks want to see 2 years' history of commissions. And for real estate agents in the industry who aren't on a retainer and they're just on commissions only, they've got to be in the industry for 2 years and have 2 solid, good years of commissions. Now, we do have a major bank that will only need to see 3 months evidence of their commissions, and they'll use 80% of that. And that's a real winner for those that aren't on a retainer and just on comms only. So there's been a lot of talk in the industry about the living expenses that need to be disclosed to the bank. Now, the bank has their benchmark living expenses, and the banks are really expecting the broker to really go through the client's transaction account to see what their spending patterns are like. So if your living expenses are less than the benchmark, then the bank will just work off the benchmark. But if it's more than the benchmark, then we need to disclose that to the bank. So if your expenditure per month is greater than that benchmark, then that's really going to pull you down from a borrowing power perspective. The other thing that pulls you down is if you've got kids. That requires more expenditure on a living allowance. So kids, unfortunately, they are an asset, but sometimes they can be deemed a liability in the eyes of banks, unfortunately. Another trick that we tend to we'll cut that. Another trick that we do play with the banks if we're a little bit short on income is if the applicant has a company car, then some of the banks will allow us to add $5,000 on top of their income to account for the benefit of having that motor vehicle and to be able to use it privately. And that might be just enough to get us over the line. Okay. So everyone's circumstances are different. We deal with 27 different banks and building societies, and we'll send our clients to the bank that has got the best offering for the client. Now, sometimes people don't have a choice in which bank they can go to. Sometimes, based on their circumstances, they are forced to go to a particular bank. And that may not necessarily be a bad thing, because we've got the ability to send a pricing request through to each bank to get them to match other banks that might have leading rates in the market, whether it's fixed or variable. If you're interested in knowing what your borrowing power is and what options are available to you in the way of lenders and interest rates, feel free to give me a call or send me an email and make an appointment to come and see me. Or if you're pressed for time, then we can just have a 10-minute phone conversation, and I should be able to run the numbers for you over the phone and give you immediate feedback based on the information that you tell me in that short period of time. Thank you.